Well, we've finally got some movement in the market. Bitcoin has opened this week with a nice low time frame bullish trend. And I know a lot of people are starting to get excited right about now, but is this excitement really warranted? And are the dark times truly over? In today's video, I'm going to deeply analyze a small time frame price action because whilst we're seeing the current price rise, I'm also seeing some other warnings in my other indicators that are basically telling me to ride the trend for now, but let's not get too excited just yet. On this channel, we also know that Mondays are when the false move often happens to start the week. So we're going to get into that and much more. If you're new here, welcome. I'm Annie and this is Trade Travel Chill. If you're returning, welcome back. Be sure to hit that subscribe button if you're not already subscribed, and hit the like button as well so that you can let the YouTube algorithm know that this channel is the type of content traders need. So let's take a look at Bitcoin on the smaller time frames to assess how the weekend has opened so far. I'm going to start actually with the 15-minute time frame. Now I'm on the daily time frame currently, but I'll come back to that in a second. I just want to briefly talk about how the market has opened so far this week to explain how the false move works. So we can see here this was the weekend trap price action where basically you have a false move that happens on Friday, the prior week, and that false move is designed to trap traders into a position and then send the price sideways for most of the weekend, where the price doesn't hit your take profit, but it also doesn't invalidate your trade. And the idea is to keep traders in open positions so that when the new week starts, the market makers can push the price out of that range swiftly, trapping traders in the wrong direction and essentially using them as liquidity. So we can see that from this weekend trap, that's what's happened this week. When the green candles come in like that, that is your hint that the price moved quite fast out of the zone. And from there, we started to create the trend. So far, we can see that the 50 EMA here, which is the blue line on my chart, is the one that acted as support before we had this trend continuation after the breakout. Now you can see I've got this little finger here pointing to this indicator down here, and this is the open interest. Now, normally the false move week beginning starts with a liquidation. However, it's not always the same thing that happens. What they can do is move price fast in a direction to encourage traders to open positions in that direction, and they can come and take that back later on down the track. So the fact that I'm seeing this open interest rise, that is telling me the market makers are trying to get commitment from retail traders right now, meaning they actually need more market participants. And because that open interest is rising, it's actually working. The caution here, however, is in my third indicator down here, where we can see that whilst we have price rising, we also have open interest rising, we actually have volume declining. So we didn't have much excitement coming in as the price was moving up. And that just means the market maker has to work a little bit harder to get more market participants involved, to have them believe that this is going to be a real trend. And once they do believe that, that's when we would expect that more people will get involved. Now, some other things that I like to check on a Monday when I'm trying to assess whether we're in a false move or not is I like to have a look at the funding rates, because if I can see them overheating, that's usually when you expect a reversal. Currently, the funding rates are fairly neutral across Bitcoin as well as altcoins. So that's fine. That's not something to worry about for now. And I also like to have a look at the CVD, which is the cumulative volume delta. And I like to break this up. Now look at this on a smaller time frame. So I've got the 15-minute time frame currently, and I like to look at the coin margin contracts separately to the stable coin margin contracts. And then the last one down here is the spot CVD. And the reason why I like to separate them and look at them individually is because if we start a trend, in order to know if it's going to be a sustained trend or not, the spot volume has to come in, because generally spot traders are more investors. They would see that the current price is a good price for them to buy the asset, because that's what you're doing when you're spot trading. You're actually buying the asset. When you're futures trading, you're not buying the asset. You're just trading the value of it up and down. So sometimes if we don't see the spot CVD rising, we only see the futures rising, then we know that we're being set up in a trap trap because the market makers are just trying to get more leverage into the market in any direction because they're going to take it back later. So the good news is that we currently do have all of them rising. So for short-term trend, that is a good thing. And we also like to see the open interest rising. Now, when I zoom out a little bit more on this, so I want to have a look from the weekend trap. When I'm looking at this open interest down here, over the weekend, you can see the open interest was pretty flat. Then as the weekend was ending, it actually started to lower. So that was the divergence that we had. And only now, since we had the breakout and the retest of the weekend trap right here, we can see the interest coming in. So people are waiting for a confirmed change in trend before they get involved. To show you what that looks like on the chart, that was this right here. And you can also see that on this open interest right here. So that's good. It kind of means that the trading participants right now are pretty good traders, waiting for a breakout and a retest. They're waiting for a trend to be proven. That's kind of all the stuff that you should do in order to not get wrecked. So that's all good. However, we really do need to see volume come in if this isn't going to turn around on us. The other thing that we look for on a Monday is for potential changes in trend at session changeovers. So this is the Asia session that happened today right here. And Asia ran a trend to the upside. That's not usually Asia's job. Asia's job is just to consolidate, but today it decided to run a trend. So again, that sometimes can mean false move. And UK was this session here, which at the time of me filming this was currently still in the UK session. And UK has decided to continue the trend. Now, this time it has broken the high of last week at 87,500, but only just. So nothing to write home about just yet. But what tends to happen in the last hour or so of the UK is we get an extended move, and that could be what we're seeing here right now. And sometimes when you get that extended move that breaks one of your key levels, whether it's the initial high of the day or the high of the week or whatever it is, what you would be looking for in the beginning of the US session is for hints that that was the final breakout before the trend does change. Now, it might not be these exact candles right here because, as I said, there's still 2 hours of UK to go. So this trend could continue up. What I want you to pay attention to is not the current price. I want you to pay attention to the movement that I'm going to show you, because that is going to be your hint to take profit if the US is in fact going to turn this around. And what that will be is that the UK finishes with its spike high, whether this ends up being it or it goes a little bit higher first, and then we will retrace, and in the beginning couple of hours of the US, we will try to repeat the level, but we won't go as high as the UK high, essentially creating a lower high. If that does happen, that is where we know that the US is going to take the trend back down. And if it does that, that trend could potentially last for anywhere from 1 to 3 days, and that will actually form the real trend of the week, and it will confirm that this move up today was in fact the false move week beginning. So this is what you need to watch for in order to be cautious and to know whether or not you should take profit on your longs before the US takes it all back. What's the best case scenario? The best case scenario would be that we get another retest of the 50 EMA. What would you do there? So if price does come back in the US and retests and holds the 50 EMA, it could even potentially be 50% Asia. So always think of it as a range, not an exact level. But if you were able to get price to come back in the US, retest and hold this area, that would essentially create another higher low, and it would be confirmation of a good trend, because that higher low would still be higher than the last higher high, which is right here. And that's a pretty good trend that you'd have going on there. Now that's going to be your best area to open a long position if you're not already long and you're lucky enough for price to come back there. Now, could the price just come back to the 20 EMA and retest the high of the week and keep going? Yes, but at the end of the day, if it did that and then it took off and you were waiting for a lower price and so you didn't get in, that's the sort of stuff that I don't personally worry about. If I'm going to get into a trade, I want to get in at the best price possible, not any price. So I would not chase a trade that only retested the high of the week or the initial high of the day. I'd be looking here so that I could have a much better risk to reward. And if it doesn't come back, it doesn't come back. Eventually something will change and I'll be able to get a trade later on. So those are really the only two scenarios that I would would personally be looking for the rest of today's trading session. And the other reason why I'm still currently thinking more short term right now than a long-term trend just beginning is because when we zoom out to the higher time frames, like let's have a look at the 4 hour, for example, you can see that Bitcoin is currently still in this bearish wedge. Now, the bearish wedge is at level 3 on the 4 hour time frame. That can be a trap. So sometimes when you get a typical retail formation like this after a level 3 drop, which comes from our trading strategy that we trade on this channel, sometimes the retail pattern can be the trap to have you believe we're going down. So people open short positions because they don't understand this method here of things always moving in threes. And then the price just breaks out of that flag and continues to the upside and liquidates the retail traders. So I am very cautious that this is a bear flag at level 3, and I'm just waiting to see it either breaks the flag to the upside, and then great, we've got more upside to come and we may start coming for some higher liquidity. But if it tests the top trend line again and holds it as a resistance, that's where I'm going to move back down to lower time frames to look for signs of weakness, being something similar to the M formation that I explained to you earlier. That's going to tell me that this bear flag is actually going to play out, and I should then be looking for short positions. And whilst we're in this early stage push, it really is the perfect time to level up your trading skills and get ready for whatever comes next, whether it's bullish or bearish. Today, I'm excited to officially announce that we've just launched our brand new Trade Travel Chill memberships. I've been listening to your feedback online for a really long time, and I've worked really hard to figure out how to bring you something to enable more people to be able to learn to trade this method in full and get a little bit deeper understanding of our trading strategies that we use on this channel. So let me break down the new memberships for you. We have 2 for you to choose from. The business class membership is our low tier membership. It's designed for self-paced learners. So you will get access to all of our courses, all of our daily written market updates, our custom indicators for TradingView, and you'll also get full access to recordings of every live session. This membership level is perfect if you prefer to learn on your own without the chaos of live Discord chats and community noise, and you just like clean, structured education and tools. So just remember that this membership right here is a self-paced learning membership. So the only thing that you don't get access to with this membership is the access to myself or my team, which if you're somebody who likes to learn on your own, you won't need it because you can get all of the answers that you need in our courses and in our daily updates. This membership is well and truly under the $100 mark, which is what you guys have been asking for a really long time. And finally, I have made it happen. Next, we have our first class membership, and that one is for those of you who want the hands-on support and you want the live interaction. With the first class membership, you'll get everything that you get in business class, plus you get direct access to our team, the ability to jump on our live sessions, ask questions in real time, and you can stay plugged into the high-level community conversations as they happen. With all of our memberships, we do have a 48-hour money-back guarantee, and you can sign up to a monthly membership, or you can pay for 12 months up front to get a discount. In addition to that, we now have a really easy way for you guys to be able to pay with crypto if that is something that you want to do, because we do get asked this a lot as well. And with our crypto payments, you have the option to pay either 6 months upfront or yearly upfront. So whether you're a solo learner or someone who thrives in a collaborative environment, we've built these options so you can learn your way, but never feel completely alone. So if you've been watching from the sidelines, now's the time to jump in. There is a lot happening, and it's only going to get more interesting from here. Now let's get back to the price action. So yes, whilst today's price action is exciting, it's not the time to get reckless. There are a few things still brewing beneath the surface, and one of the biggest upcoming macro catalysts is happening on April 2nd. That is the date when the US is set to roll out its new reciprocal tariffs, a trade move that could shift the tone of the global markets in a really big way. Now, the idea here is that the US will start matching the tariffs and trade barriers that other countries impose on American exports. And it sounds simple, but it could get really messy, especially if we see retaliation from places like China or the EU. Now, depending on how aggressive those tariffs are and how the rest of the world responds, this could trigger either a relief rally or a risk-off environment. And it's also one of the reasons why I'm very cautious that the current move that we're seeing up might just be a run into that event, potential sell-off after. I also think that's why institutions might still be positioning cautiously behind the scenes, even as the charts look bullish on the surface. So let's go and take a look at the S&P. And we are seeing a nice move up today, which is kind of helpful for crypto as well. This is a long-term, sort of not long-term, but medium-term trade idea that I have been waiting for with the S&P. So currently it does look like we have the left side W in on the 4-hour time frame, waiting to see if we get the other side. That may not happen because the S&P can often do a V-shaped recovery. However, when it does, it tends to move a lot faster than what it is right now. So I'm still open to this idea. And I think potentially around that April 2nd date, there's a couple of scenarios that could happen. If it's not great and it causes a market sell-off, it's possible because we're moving up currently, it's possible that the market sell-off just creates the second side of a W. So we may either just revisit the prior low or we may create a higher low. And that's going to be our best case scenario, honestly. Like that is where I would look to build a lot heavier in my current long positions, because I think if that were to happen, the market would recover after that. And I think, you know, I'm not talking like next 6 months. I'm talking like if we were to get something like that, we may have a month or 6 weeks of some nice bullish price action, and then we'd have to reassess everything after that. So this would be best case scenario. However, if it turns out terrible, then we could actually go into a lot more of a correction. So it is really critical. And I really think because of this and because of the April 2nd kind of deadline, we really should be treating all the trades that we do right now as short-term trades. Take your profits regularly and just keep an eye. You know, it's only the 24th of March right now. So we do still, we could have a week or, a week to 10 days of some good price action and great for trading. But I think that in that period really should be locking in profits when price does get to your targets and just not trying to push it too far. When we have a look at the NASDAQ, this is actually some really beautiful price action that I really quite love. And yeah, if it weren't for April 2nd, I'd be hoping that this continued. But NASDAQ gave us a really nice W. The center peak here got broken and retested deliciously. And then it retested it a second time. So essentially within its consolidation, it created another W. That's lovely. Like that is, when you're trading the method that we trade on this channel, this is exactly what we like to see. This would be considered a level 1 rise, consolidation, currently in level 2 rise. Could it be that this continues up for another week to give us a level 3 rise into the April 2nd event? Potentially, if it goes bad, we come down for a correction and then we reassess everything from there. Yeah, that's totally possible. So what does this mean for altcoins then? That's always the question, isn't it? We can see today we've got a pretty nice green day across the altcoins. Some ones that are doing really well is AVAX. What else have we got? Renders seems to be doing really well. You know, on my watch list, I really only have the USA coin, so I'm not really looking at anything else, but it's a nice green day. So if you want to know whether or not it's worth trading alts and whether you can make good money from them or not, we turn to the dominances. So starting with Bitcoin dominance, I'm still seeing it essentially in this pattern right here. It's looking like it wants to break down. Would be delicious if this ended up being a lower high that eventually broke down. That's going to be great for your altcoin trades. Still, I would treat them as short term until we're through that April 2nd event, but it could give you some good short-term altcoin trades for now. Buy the dips, not necessarily. Not that I'm a buy the dip channel anyway. When we have a look at have a look at the stablecoin dominance, this is what I actually wanted to see. So you can see here, I've got this area of interest marked out and I wanted to see this rejection right here, which looks like we're currently getting that. So that's fantastic. I just need that to continue now. So if the stablecoin dominance starts to come down, great. The best scenario is going to be Bitcoin dominance comes down, stablecoin dominance comes down, Bitcoin price continues up. That's when you're going to see your altcoins fly. So keep an eye on those. Let's go and have a look at the total. Now this total, I've redone it. I've done it as the total 2 so that it doesn't include Bitcoin and also minus the major stable coins from it. So I really just want to know when I'm looking at total 2, what are the altcoins alone telling me, not stable coins. The total 2 usually includes stable coins. Well, not usually, it does. So I'm seeing like it's an okay attempted, potentially nearly soon bullish formation. Like, is that non-committal? That is really non-committal. But it looks like it's got a good chance of starting to change a trend. And what I mean by that is we've had all these lower highs and lower lows, and we've been moving down, but we've come back to retest the 800 EMA, which is this purple one right here. You can see here it acted as support previously as well. So we're currently still acting as support, but we are under the 50 EMA. So we are potentially at the very early stages of it changing trend. And that's what we'd be looking for next. However, if it does come back up to the 50 EMA and reject again, you know, that would be on the presence of bad news, which we never know when that is coming. So that is where you might want to turn risk off on your altcoins again if that were to happen, because you can see here that the 50 EMA previously did act as a resistance level. So it's early, but best case scenario, we get something like this with a higher low and off we go for alts. Worst case scenario is we have weakness at the 50 EMA, and probably upon negative economic news, we prepare for our alts to die once again. But that's the thing, right? When you're a trader, it really doesn't matter if the market is going up or going down. It doesn't matter. You can make money either way, regardless of the direction the price is going. So on that note, if you're looking for a solid crypto exchange to trade some of these altcoins on, check out Bitunix. It's a non-KYC exchange, no VPN required to sign up, and it offers both spot trading and leverage with some of the lowest fees in the game. But here's the best part. If you use the link in the description below, in addition to their already low fees, you'll also unlock an exclusive 20% trading fee rebate on all your futures trades for life. It's a massive saving if you're trading actively. Not to mention, if you're a Trade Travel Chill member with one of the memberships that I mentioned earlier in this video, and you've signed up to Bitunix using our link in the description of this video, then once you're inside our Discord, you'll unlock access to exclusive competitions and giveaways that are only available to our verified exchange traders. So don't miss out on that. The link is right below in the description of this video. So my message today is this: enjoy the price action, but stay sharp. Keep an eye on that US Open. It's going to give you the hint as to whether or not the trend is going to continue or not. And finally, the real trend, the real upcoming macro trend is probably going to be coming sometime after April 2nd. So short-term trading until then, we will reassess once we know what's going on.